You want to be smart. I want to be smart. Do you want to be smart, Lindsay?
I do.
Okay, all right. We all want to be smart. We all don't want to make the wrong decision, right? And so right now we're in this time where people are just stuck with indecision and nobody wants to make the wrong decision. Hi, I'm Matthew Parsons, Knoxville real estate expert, and today I'm with
Lindsay Whitworth with Mortgage Investors Group.
And we're going to talk to you really quick about what's happening with mortgage rates and the Fed and raising of rates and all that stuff so that you can make some smart decisions. Okay, so Lindsay, today is Monday, and last Wednesday the Fed met. Okay, these are the people who set interest rates.
Correct.
All right, so what happened with the Fed last week?
So the Fed decided to raise the Fed funds rate 3/4 of a point, which was rumored, and they followed through on that.
Okay.
They did that last week.
Okay, and so when we see the Fed raising rates, what does that mean for mortgage rates?
So the biggest thing I always want to say is that the Fed funds rate and the Fed raising the rate is not the mortgage rates.
Okay.
So that's how banks borrow money. The Fed raises the rates, the banks borrow money overnight. This impacts things like your credit cards, your home equity line of credit,
Right.
borrowing for an auto loan. But it does impact what the Fed does impact mortgage rates by what actions they're taking.
Sure. So we see a correlation, but they're not necessarily directly related. It's not like what they do impacts here.
Yes.
But we see the ripple effect in the mortgage market.
We do. So let's say rates were 7%, last week, and the Fed raises it 3/4 of points. It doesn't mean the rates are 7.75%, right? Now maybe they went to 7.75%.
Actually, I think I looked it up this morning. I
Yeah.
think it was like 7.75%.
Yeah, ironically, that maybe worked out well.
But that doesn't necessarily mean that that's what it's going to be.
No.
And actually, when I did a little mortgage calculator, and I know that you've got one on your website, which is
Yes.
what? No.
Yeah.
LindsayLoansTN.com. There you
Matthew,
go.
I'm so glad
Don't
you
worry,
know my
I got this.
website.
There you
This
go.
is awesome.
So go to LindsayLoansTN.com. But one of the things I did on the mortgage calculator that I was using is I changed my credit score, and I saw the rate change in that moment, right? So,
Yes.
yeah.
Yes. Yeah.
So again,
Impactful.
yes, exactly.
Yeah.
All right. So we saw the Fed change things, and so what happened to markets over the next couple days?
So even that day, so Wednesday afternoon, Fed Chairman Powell, he came on and they do a press conference. They get to have, questions from the news media that are there. What happened is he came out and said something completely different. The forecast for
Right.
the future rate hikes, they had mentioned that they might, cool off a little bit. He may not raise them as much to combat inflation, but actually he basically said the complete opposite of that, where he is going to, pedal to the metal. We're going to raise them, maybe even over raise them to the point where we can always lower them, but the markets hated that.
Right.
They hated it.
Right. So, and let's
So-
face it, because markets do okay with the known.
Correct.
They do okay with the known. It's
Yes.
the unknown where
Yes.
it's the uncertainty. And we started this video by saying, hey, listen, you want to be smart. And part of it is a lot of people go, I don't know what's going to happen. So I'm going to hold on. I'm going to wait. And again,
Right.
I see this over and over and over again. And I hear this over and over again. I'm going to wait to buy a house until rates go down. And,
Right.
and again, if you've watched one of these videos, I need you to understand, if you want to be smart, then you should buy now.
Yes.
I don't even care what the interest rates are. If they go up to 9%, you know what I'm going to say? I'm going to say you should buy now. And because really what you know is what the rate is today. And if you can afford it and you get locked in today,
Right.
then when rates go down, you can refinance and you're smart, right? If rates go up, you're locked in and you can afford it, and guess what? You are smart, right? So if you want to be smart, you want to get into the real estate market today. Now, Lindsay, you talked about the mortgage rates or the stock market, right?
Yes.
Kind of went a little crazy then after Powell talked.
Yes.
And so we saw the stock market go down. Does the
Right.
stock market have a direct impact on mortgage rates?
Yes and no. So
Okay.
generally speaking, when the stock market goes down, that's because the investors are pulling their money out of the stock market and they're putting it somewhere else.
Okay.
Right?
Right.
So typically they would pull it out of the stock market and they would put it in mortgage bonds, and that would make our rates get better, right?
Okay.
People are buying mortgage bonds, but that's not what happened, last week. So they were just pulling their money out of the stock market.
Sure.
Period.
Yeah, and sticking them
And
under their
just-
mattress.
right, exactly. Buried it in the backyard.
Exactly,
Yeah.
exactly. So, okay. So oftentimes when we see the stock market going down, we can expect rates or mortgage rates
To improve.
to also improve and go down.
Right.
Although that necessarily hasn't, that's been traditional, not
It
necessarily.
has been traditional, and unfortunately, we've been in a lot of uncharted territory the last couple of years,
Yeah.
just because the market movers happened for a lot of different reasons, war and COVID.
COVID.
And,
I was going to say, I heard something about some sort of pandemic or something. So
that's
yeah,
weird.
yeah.
I haven't heard of it.
Anyway, so there you go. So that's what we're seeing happen with mortgage rates. That's why, listen, we want you to be smart. Everybody wants to do the smart thing with their money, with their houses, for their families. And that's why we do these videos. We want to educate you. We want to give you a sounding board, or we want to give you information that will help you make smart decisions along the way. And if you want to talk more, we're open to those conversations. Lindsay, how can people get a hold of you?
They can reach me on my cell phone at 865-306-3725.
And if you want to talk about houses and, again, mortgage rates, you're talking to Lindsay about mortgage rates. I can give you a little bit of information, but I'm going to push it to her. But if you want to talk about home prices, give me a call at 865-761-9797 or text. It's all good. Be sure to like and subscribe to these videos. I'm Matthew Parsons. Thank you, and God bless.